Todd Rissel with e2Value, and we provide data and values for structures across North America. The reason property intelligence is important, I think it makes a difference between what you're going to make some money or not make some money. And I think the understanding today with what the exposures are, what the values are, and understanding how you can tailor rates or coverages for a particular property or portfolio of properties. And I think those that are using that are showing that they're exceeding their expectations as far as results, and those that aren't maybe not hitting those same high results. e2Value is delighted to be partnering with InsTech around this particular event and our other events because right now property intelligence, this topic has just been, received the attention it deserves, I think. And I think within the marketplace, when you're allocating capital, you want to make sure the folks understand what they're doing and how they're doing with that process.
We're digging into this really fascinating topic about how are buildings assessed for their rebuild cost at the point of underwriting, something a lot of people don't always understand the implications of that, but how critical that is in terms of actually ensuring that the policyholders get their payment paid out and insurers know exactly what they're going to be insuring in their portfolios. So what do you look for in the quality of data that you use for rebuilding cost?
As a CAT analyst, I would look at external CAT providers who are as invested in currency and granularity of their replacement costs as we are. In addition to this, the frequency of updates and the ease of integration of those updates into process workflows is important.
When setting rebuild costs, the two things we focus on are the size of the structure, how big is it, and then the use of the structure. So homes are pretty easy because you use them for homes, and that's where size has a big influence. But from the commercial side, it's much different rebuilding a warehouse than rebuilding a habitational, rebuilding a restaurant versus a convenience store, etc.
When a claim happens, what happens if that building has been uninsured because the rebuild cost was inaccurate?
The inaccuracy at the time of a claim is really varies from provider to provider, but most cases, the person who bought the policy for financial protection won't be financially protected. They'll go to an 80% clause, the co-insurance clause. So unfortunately, what happens most of the time is the people who are looking for protection don't get any.
We do see this quite a bit on CAT-exposed accounts, especially for CAT-exposed properties. There is a tendency to underestimate replacement value. In many cases, this is somewhat unintended. It's a consequence of not following or not keeping track of recent changes in code or in the assignment of benefit trends and how they have impacted replacement costs.
Do you tend to trust your clients' view of rebuild cost, or do you like to run your own assessment of that independently?
I always prefer an independent opinion, always, to have that on the side in addition to the data that we get from clients. And the reason having an independent opinion is useful is because as CAT managers, CAT analysts, it forces us to have a view and keep that view current when it comes to replacement costs. And over time, it allows us to assess our clients and brokers for how much attention they really pay to data quality and data completeness.
So Todd, if there's been a large catastrophic loss, what typically would you see as the range of difference between a portfolio that had been correctly assessed for rebuild costs versus one where perhaps the rebuilding cost had been underestimated?
Yeah, we're looking at a catastrophic loss from a portfolio standpoint, and this is reported to us by our clients, so it's not e2Value's research, it's people paying the claims and looking at their books of business. You can see as much as 100% difference, understanding what they thought was there and what actually turned out to be there. And I think a recent statistic from out of California is after a catastrophe, it's 98% likely that everybody's going to be underinsured by at least 50%. So there's other data points on this besides just us and our clients.
And what about the premiums insurers are receiving? Are they losing money by not having a correct rebuild cost?
Yeah, I think insurers are losing premium in two different ways. One way, they're losing premium in that they're just not collecting the right premium for the right risk. And so they think it's more of an average number that they're applying an average rate to, where if they put the true value on the structure, they might see a 20% increase in premiums, but it's a better alignment of those premiums. So I think if you get the right replacement cost, it helps you better define your portfolio. And if you're only insuring homes up to $1 million, then you don't want $2 million homes in your portfolio. So there's not enough rate there, no matter what happens, to make up for that.
What is most important for you when you're assessing rebuild cost?
I look at the exposure first for completeness in terms of its primary characteristics or COPE, the accuracy of the address provided, and I look at the exposure against the granularity of the data that the data provider can provide for that region.
Todd, just had a really interesting discussion with a number of people from insurance companies in London that are insuring North America business. From your perspective, any particular insights that come out from that, or questions that you thought were particularly relevant just now?
Yeah, I thought the questions from the group were very interesting, and it showed a real enthusiasm around understanding the topic, but also a true application of putting that to work in their own business. And I think they were really eager for information. It was a discussion, not a lecture. It was a real participation, and that really shows the great insight, I think, and the understanding and the keen idea that they want to know what's going on in the marketplace by this group.